figuring out a way to invest where if things go bad, you don't lose everything. If things go well, you make a good return, right? A lot of people invest in a way that if things go badly, they lose everything.
Yeah.
And in some cases, they're liable to other liabilities. But if things go well, and it's like the most moonshot of a moonshot, type of chance that it works out, then they'll make a fortune.
Welcome back to the show. I am your host, Remington Ramsey, and today my guest is Mr. Justin Donald, the lifestyle investor himself, one of my favorite books of the decade. And I don't say that lightly. I read 2 books a month, Justin, and yours is one of my favorite. Welcome to the show.
Well, thank you. Great to be on the show here with you, Remington, and appreciate the kind words. It's an honor and a privilege that I would make your top list of books.
Oh, man. And it's a good one. And I remember I even did a little coaching with you back in the day. And what I love about you, Justin, is sometimes I feel like people write what they think sounds good in a book. They write what someone else said in a book. I think all of yours is unique content. But what I love most is that you do what you say. Like it is literally almost a memoirs of how did I get here? And I've seen that firsthand. So your claim to fame is leaving your 9-to-5, or not really a 9-to-5, but a certain role in sales management to get into a specific type of real estate, one that we've had on the show. We've actually had Frank Rolfe on the show, Justin.
Love it. Love Frank.
Mobile home parks was kind of your niche in real estate that helped you break out, but then really helped you craft this idea of lifestyle investing. So can you briefly share with us that moment in your life where you changed from a 9-to-5 and went into this entrepreneurial roller coaster?
Yeah, I think I just got to the point where I kind of had enough of trading time for money that it was so linear that if I put in this many hours, I would earn this much, or if I yielded this result that took whatever hours or whatever infrastructure, I would get, this return on my time. And it just wasn't scalable. It wasn't, it just wasn't sustainable for me. I realize for some people it can be, but that's just not how I was built. And I wanted to be in control of my time more. I wanted to buy my time back and truly live life on my terms. So I decided what better way to do that than to copy someone else and figure out, who's done the best. And Frank, who was on your show, was a great mentor to me. I went to his boot camp, learned what he was doing. I had another friend doing it as well. And bought my first property, which was nerve-wracking as all could be. But
sure,
it went well. That single transaction really bought my wife's time back. She was able to retire as a teacher. And we bought another one that created our survival income. So we didn't have to work at that point, but it was just the bare minimum and getting us by, not lifestyle, just all bills were paid through passive income. And then we bought one more property, and that one covered our lifestyle. And eventually we sold that, flipped into 2 other ones that were even more lucrative, and that more than covered our earned income. And so at that point in time, it didn't make sense. I had friends, by the way, that said, "You're crazy. You could double up. You could make twice as much money." But for me, it was never about making more money. It was about buying my time back. I didn't need more money. Right. I needed more time.
So, okay, how old were you when you bought your first park?
Let's see. I probably was 28 or 29.
And what was your family dynamic? You were married. Did you have any kids?
So I was married. That's it. Okay. Yeah. So maybe I was 30 when the transaction actually went through. I had something under contract for a long time. I was trying to get a deal done with the seller who I thought wanted to sell, and then felt like maybe he didn't want to sell. And so it took quite a while for that first transaction to get done. But yeah, we didn't have kids yet. I've got a daughter now, and back then we didn't. But that was kind of like the key to my wife and I getting on the same schedule. We were on opposite schedules for work. And so her, buying her time back and not having to work and being able to be a stay-at-home mom when we had our daughter was huge for her. Yeah. I mean, that was a dream come true.
Well, you said it was nerve wracking, and I imagine. I mean, I know some of your accolades, some of that we didn't share, but I mean, tens of billions of dollars made from the mobile home park industry. You talk about it in your book, so the success is there on the. We can see it looking back. But you said it was nerve wracking to buy that first park. So can you walk us through like what was going on emotionally, what was going on financially, what made it so nerve wracking?
Well, this is the most I'd ever invested in a deal at a single time before. It was $65,000, and that was a ton of money. And I didn't want to lose it. I didn't want to make a bad decision. I was just kind of a little freaked out. Like, what am I doing? Is this the right move? Could I be doing something different? And I remember waking up in the middle of the night, in cold sweats, thinking like, am I crazy? I mean, everyone's telling me I'm crazy. Everyone's telling me don't invest in mobile home parks, except for really two people, one who's the most successful guy to ever do it on the private side of things, and then a good buddy who learned from him.
Yeah.
And so I figured, all right, I got to stop letting my emotions rule my life. And previously, by the way, I had decided to outsource my financial life to, who was supposed to be a professional, to, a financial planner, a money manager. And I didn't take the ownership of it that I should have. I just thought that they knew, what they were doing and that they would do well. And that industry is a lot more corrupt and incongruent or misaligned from investors than what you would expect. And so I just had this eye-opening experience that what I thought was happening and what was communicating to me, what was being communicated to me, wasn't the reality of what was really going on. And I had to stop outsourcing. I had to own my own financial, future. And part of that was taking this leap and saying, hey, I got to get out of the emotional place. I got to get into the logical place. The logic says, if these other people can do it and I've got the same playbook as they have, then in theory, I should be able to do it as well. Maybe not as strong or as good as they are yet, but even if I'm 70% as good as them, that's better than where I am today without it. And that's really what kind of pushed me over the edge, is saying, I'm a good copycat. If I got the playbook, I can figure it out.
Now, you did this with mobile home parks, but I'm wondering if the key takeaway for someone listening to this could be just taking the plunge. Like you obviously did enough research to know that one could be successful here. I asked Frank straight up, and I'd be curious as to your answer to this. We know that there's a finite amount of parks. There's around 40,000 parks in the US. And we also know that there was a period of time where boomers were selling parks, and they had never sold to anyone, let alone like big corporations or even smaller mom and pops that are starting to act like a Justin Donald who has 10 parks that runs it more like a business. There's a bunch of parks that are still being owned by what you would call a mom and pop. But for me, what I asked Frank was, now you've got this 10-year period where now all the Justins of the world are buying these. Have we missed our mark as like a small time investor to get into this industry? What do you think?
No way. Absolutely not. It's the least consolidated real estate asset class that's out there by a large margin. It's probably only 10%, maybe 15% institutionally owned. So the vast majority are owned by, baby boomers and by, smaller investors. It's the exact flip-flop of the apartment complex industry for multifamily. They're about 90% institutionally owned, and so it's just a totally different thing. So no, you haven't missed the opportunity. There's plenty of opportunity, and I know that for a fact because I just bought a park last week from someone that is the exact demographic that everyone would want to buy from.
Okay. So we're going to get into how you bought that, because money is not easy right now. You wrote your book. What year did your book came out?
I think that launched in 2019.
2019. So the economic climate of 2019 is very different than it is now, especially in real estate. Before I get into that, how many parks have you owned? How many parks have you purchased?
I think we have 16 now. We've bought and sold others.
Yeah.
But I think we own 16 right now. It may be 17.
And is your goal as an investor to look for something that you can flip or for something that you can buy and hold? Is it really just whatever the deal is?
I mean, I would like to play the long game in most of the things that I do because I don't want to speculate that things could work short term. So I need to know that they're going to work long term. And if I have an opportunity to make a return that is substantial, that makes sense on a short term basis, that's great. But I don't want to go into something short term thinking I can get out and be stuck with it in a deal that I wouldn't have done otherwise.
Well, if you're interested in more, if you're listening to this and you're interested in more explanation as to like the business side of owning parks, I would encourage you to check out Frank Rolfe's, because that's not what I want to get into with Justin today. Justin took this model of buying mobile home parks and then also was an investor in certain franchises and realized that there is a way to keep most of your money in your pocket or to invest in things that you're already interested in without doing what most people would do, which is go to the banks, go to the financial advisors, tie up your money till you're 55 or 60. And so can you describe to us your aha moments before you wrote the book and why the book is so special?
Well, really, the aha moment was that the financial industry was not serving me. I'm supposed to be their client and I'm getting, misinformation about what's really happening. So that way, like the data is manipulated to make me think that things are performing better than they really are. So, I mean, that
Could you
to
give me an
me
example
was,
of that, like a real-time example of that?
yeah, I was being quoted on statements of an average rate of return of what my portfolio was performing when the actual return was far less and far worse. And so to have a yield that by anyone's estimation, looking at statements, talking to a financial advisor, like anyone would say, wow, you've had a positive return virtually this whole time, except that the actual return during the negative moments more than outweighed the positive return. So I'm losing money. I lost money when it looked like I should have made money. And so like calculating the numbers on my own was a real wake up call. Like this is an industry that is not looking out for my best interests. And it, caused me to go down a path of figuring out, okay, what do the wealthiest people in the world do? The wealthiest people do not put the majority of their net worth in the stock market. They have an allocation in it, but the wealthiest people, it's a percentage. It's 15 to 20, maybe 25%. Really? They've got another 25% plus in private equity, another 25% plus in real estate, and then the rest 25% plus in.
So the Warren Buffetts of the world are not primarily leveraged on the stock market.
Well, the Warren Buffetts of the world are a little bit different, but he's kind of his own unique breed. I think, most people
of the 1%.
Yeah, most people. And by the way, he's building, an allocation across a bunch of different type of companies. So there's diversification there. He's also buying up companies that profit margins are incredible. He's gaining control. There are things that he's doing that most people will never be able to do. He's the anomaly. If you take a look at the wealthiest people, these stats are published. You can pay for these reports, but you look at the billionaires of the world, you look at the centimillionaires of the world, like anyone in the hundreds of millions or billions of dollars, they have what's called a family office. And these family offices manage their money. And it's a group of people that have different roles, but it's basically an in-house financial management shop. And they do a lot of alternative investments. They do a lot of, they spread things across the board. But the biggest thing to note is that they're allocated across many different things. And that way, in good times or bad times, there's always something performing well. They're not too heavily weighted in any single area.
Well, I bring up Warren Buffett, and you know where I'm going with this. You have been, I've seen, if you Google Justin Donald, you don't have to go too far to see where he has been called this generation's Warren Buffett. And I don't think you've been called Baby Buffett, but I'd like to coin that term, Baby Buffett, like Baby Gronk, like in the NFL, you're Baby Buffett. How do you feel about that?
Well, anytime I can be compared to one of the greats, it's flattering. I feel like I'm a ways off from that. And if I can be, a 1/20th or 1/50th of what he's been able to do or figure out, I'd be very happy. But on the standpoint of buying your time back, like I don't feel like I need to, I don't need to be a billionaire. I want to be a time billionaire though.
I love that. So tell us how you did that. You basically took this concept. Your first park, your wife stopped working. Your second park gave you a little bit more freedom. By your third park, you officially quit your day job and went into full-time investment and buying my time back mode. Then you wrote the book. So what is the inspiration for the book? What is the book all about?
Well, we've got a mutual friend that really, I mean, bless his soul, he was pretty hardcore and really held me accountable to the fact that at some point I should write a book. He knew I wanted to. He knew I had a lot of friends asking me to, or asking me to coach, or asking me to, organize a community with everyone. And I just kind of kicked the can down the road because I never saw myself as an author. And one day we were having a walk here in Austin around our little town lake. And he had said, hey, what happens if you die and your daughter never learns all these things that you've figured out in the financial space? And so it was total. No, this is John Kane. Yeah. So it was a total gut punch. And I'm so thankful that he did. But I mean, the next day I started writing the book. I mean, that was it. That was the motivation I needed.
What a great friend, man.
Totally. And I wrote the book differently than most because I basically walked and talked. I literally had my recorder on my phone and I just walked around talking about all the things that I was thinking about. And I figure at some point I'll put it in order and make sense of it. So I did that for about a month and went to work a little bit more after that.
What a great friend that is. So you're right. He's a mutual friend. And John Kane, I spent one day in Philadelphia. I think I've only ever been to Philadelphia once, and it was to spend one day with John Kane. And we ran up the Rocky steps and did all that thing. And then we went to a Flyers game. And I wasn't big into hockey, but I had one hockey jersey. It was a Blackhawks jersey. So I took it to the game. And this will tell you how old this is. He goes, hey, we're going to do something cool. We're not going to take a cab. Have you ever heard of Uber? And I was like, no, what is that? So that tells you the timing of this. That was the first Uber I ever took. But he told me to take this is how crazy Philadelphia fans are. He's like, you can't wear that into the stadium. We will literally they will fight us. We will be hurt. We won't come out of the game. But that was my day with John Kane. Good friend to get you to write that book.
Yeah. Well, I'm eternally thankful. And the book kind of evolved over time. And I got feedback from clients that I'd coached and communities that I had helped facilitate. And the book grew to a lot more than I ever thought it would. And I'm flattered and honored that it's not only a number one Wall Street Journal best-selling book, but as of 2023, it's a top 1% of all books ever sold. And all the proceeds of the Lifestyle Investor all go towards fighting human trafficking. So because of the success of the book, we've literally donated hundreds of thousands of dollars to combat against these horrific groups and efforts.
That's a cause that we both give a lot to, both through Real Producers, Into Publishing, and yourself. We share that in common. Happy to hear that it's going so well for you and you're able to give such a significant amount. I want to break down the book for someone who is, let's say, mid-20s or even mid-30s, and they're working a 9-to-5 and they've never really invested except for like they bought a gold coin because they were told to do that. They bought 1/10 of a Bitcoin when it was at its highest. They have no idea what they're doing. And you're going to take this person, Justin, and you're going to coach them through how to do what a lifestyle investor would do versus the guy who's maxing out his 401k and putting all of his extra into a savings account and spending the rest. What are you going to do for this kid? How do you take him through the book steps?
Well, I think the book is pretty self-explanatory. I think it takes complex topics and simplifies them. So my goal, I mean, the thing that I say at the end of every podcast episode I ever do for the Lifestyle Investor is to take some form of action, one step towards financial freedom and towards living the life that you desire that's on your terms, right? Most people live a life by default, and this is a challenge to live life by design. Be proactive, plan, put time, interrupt your interruptions and be in a technology-free zone where you can actually plan out what life could look like or should look like or what you want it to look like. And so I think gaining that clarity and then figuring out what your investment criteria is around that Why invest or why not invest in whatever it is? Like, do you need cash flow? Are you looking for a long-term play? Are you looking for, recognizing that there's a lot of investments out there. Most of them are not good. Most of them are high risk. And so it's just figuring out a way to invest where if things go bad, you don't lose everything. If things go well, you make a good return, right? A lot of people invest in a way that if things go badly, they lose everything.
Yeah.
And in some cases, they're liable to other liabilities. But if things go well, and it's like the most moonshot of a moonshot, type of chance that it works out, then they'll make a fortune. And unfortunately, this has been glorified by so many of the entrepreneurs that get highlighted because their company was a unicorn. But
yes, Shark Tank drives me nuts. When we watched Shark Tank the other night, and like all of them were like, we sold our house and all we need is a $5 loan to get through this time. And I mean the one, you're right, the ones they're highlighting are making it look like, okay, well, that's what you have to do to be successful. And that, I love your philosophy of like, listen, if you lose, you lose a little bit, but if you win, you make a nice return. That's smart, especially if you're doing that 10 times over. Now you're not leveraged by one investment.
Yeah, the goal is to not lose. The goal is to hit singles and doubles. Like if you're taking enough risk that's a home run, then your likelihood of losing everything is going to be really high. And for me, I'd rather small returns without losing any money, because in the long run, that's going to pay off better.
Now, if you look at so one of the parts of your book, and you're not just talking about real estate here, you're leveraging other businesses as well. Small businesses, I think, is a big play of yours. I remember one chapter, I'm not sure if you talk about it, but I think you've told me like you've invested in franchises like Orange Theory, which you were a member of. Like you like working out, you enjoyed the process, you like the model. But in that particular case, you were leveraging time over money. And so how do you position yourself in an arena where you've got people with money and you've got people with ideas and you've got the business acumen, and you put it together to own part of a business?
Well, that's kind of the secret sauce right there, is if you have the ability and the know-how on how to buy a business. I like buying better than starting. There's just less risk. There's more known variables that you can figure out and attribute to being successful. But if you can just figure out how to run a business and find the operator to pair it with, it's a success story, because the operator is going to gain great skills and maybe some equity, definitely some income, whereas you don't have to commit your time. So the goal is to buy businesses without buying a job, right? Most people, they take on extra things in their life, and they're taking on extra jobs. So maybe they make more, but it's costing more time. And maybe there's a season of life where that makes sense. I'm in a season where that doesn't make sense. And I've been in that season for a long time. And I also think, even to your previous question of like, what are the steps to get there? The steps to get there are simple. Cover your lifestyle, the cost to live your life with passive income. So you don't have to work, you get to work. And it might be step by step. It might be deal by deal. Most people don't do it in one fell swoop. Most people don't have a huge exit and windfall of cash. So it's like, hey, with this deal, we covered our utilities. And with this deal, we covered our car payments. And with this deal, we covered our mortgage. And it just adds up. But the beauty, Remington, is when you get to the point that you have surplus, you're above and beyond that lifestyle, you can either increase your lifestyle, or what we did is we took 100% of that surplus, and that became our new investable capital. So for us, our life is covered by passive income. And then 100% of the overage that goes above and beyond our lifestyle literally gets invested or donated.
Man, I love that. Okay, quick question for you. I was thinking, is there any industry, like a popular industry that people like to make money in, that you will just not touch? Like, is there any industry that you're staying away from?
Well, I like to stay away from crowded industries. Okay. I like to stay away from industries that are subject to the whims, the cycles of the economy. So, I mean, gosh, I probably love saying what I enjoy being in versus
so,
what
yeah.
I don't want to be in, because I don't want to, I don't want anyone to feel like the business that they may be in, they've been dealt a bad hand, right?
Well, it's interesting you say you stay away from crowded industries, because I feel like real estate, especially today, is very crowded. Do you feel like niche products within real estate are not?
Yeah, I think mobile home parks are certainly not crowded. I mean, one of the things I'm most excited about that I just invested in last month is outdoor industrial storage. I think that's going to take off as our economy and government and country do more manufacturing on our own soil. So you're going to need this extra space, especially even doing more manufacturing, more trade with Mexico. It's just going to require equipment to be stored somewhere. So I love that. I love industrial, because e-commerce is only going to grow. We're only going to have more people shopping online for products. It's still such a small percentage of total sales. And so I like industrial storage and distribution centers, especially inside of major metros and last mile type of locations. So those are areas that I really like. I also like investments that are, still kind of a little bit of the wild, wild west. So, I think because cannabis,
not regulated,
CBD, some of those are federally legal, but still you can't do a traditional banking loan on it, right? So cannabis is not, but because of that,
in Indiana, like certain
arbitrage.
States, it still is. Yeah.
Yep. So some states it is, federally it is not legal. But federally, you've got some of these other, like between hemp and CBD, you've got one's totally legal federally, one's totally illegal federally. You've got one in the middle, then you've got state regulation. And so there's this mismatch so
you see that as an opportunity, though. You see that as an opportunity
because it's an inefficient market. So in an efficient market like the stock market, it's hard to make money. When you're trading against algorithms, you're trading against quants, you're trading against the smartest people with supercomputers and with speed that's faster than yours.
Yes.
With trades that are already locked in. I mean, it is so efficient. It is hard to make money. I want to be in markets that are inefficient, because that creates a whole ton of opportunity. To not be institutionalized creates tons of opportunity, because you have less of a competitive process to buy. There's less of a sophistication around it. The more institutional investors get in it, the more sophistication by proxy ends up happening.
Yeah. Have you seen the movie coming out, Dumb Money?
I haven't, but I'm going to. I'm excited to.
I don't know if it's out yet, but it's about, the GameStop scandal, where essentially the Joe Schmoes of the world took down the one percenters. That is fascinating to me. I feel like you are a smart version of that, what you're talking about, like not putting up against people who just have way more smarts in the industry, way more money, way more power, way more supercomputers, like you say, and playing in a space that might not be as sexy, but for the mom and pops of the world, man, they're making stupid money.
Yeah, without a doubt. And, to go against anyone that has the legal capabilities to just bury you if they wanted to. You could do nothing wrong. You could do everything right. You can be crushing it. And if you're outperforming them at a level they don't like, they can sue you for whatever reason and bury you. So I just think you got to be really careful, the battles that you pick and who, you're going against. And then I like to be in markets. I call them invisible deals in my book. I want to get into trends that most people don't yet see. These are the future trends. These are based on the fact that we're about to have the largest wealth transfer in the history of the world, from baby boomers to millennials, over the next 10 to 20 years. And to the tune of anywhere from 75 trillion to 105 trillion is what, the experts have said. Which, for perspective, the second wealthiest country in the world, China, the wealth of their nation is $75 trillion. So it's a wealth transfer that big. Well, let's figure out what millennials shop for and what their, consumer habits are and what their recreational habits are. What do they like to do? How do they like to work? Figuring that out. And then the baby boomers that are selling to them. and what are they selling? And can we get in and get a good deal? Because most of their kids don't want their businesses. So they don't even think they can sell. So you can come in and get a great deal. So when I talk about invisible deals, I literally mean like you're investing in something that is off the market, or maybe they don't even want to sell, but you talk them into selling,
right?
Or you're identifying
true door knocking. Yeah.
That's not mainstream yet.
I came up with a great book while you were telling me about the transfer of 75 trillion from baby boomers to millennials. I came up with a good book name for that, Justin.
Let's hear it.
From living in the basement to owning the home.
All right.
That's the name of the book. Because right now I feel like most millennials are nowhere near in a position to inherit that cash. At least, well, I mean, so I'm 35. I think I'm at the tail end of millennials. So I think maybe we're getting our act together now. But man, 10 years ago, that would scare me to death.
Yeah. And it'll be interesting because are they as good with money? Are they as sophisticated? In some senses, you could say no. In other senses, you could say yes. I mean, the smartest plays to make are getting the right technology. Like, how do you invest in the right technology that is what is going to be the future? And I do think that they have a pulse of that better than a baby boomer, even though they may not know how to manage money the same way or be as good or be as responsible. So, it's pros and cons. That's how I would look at it. But at the end of the day, there's just ample opportunity. And when we get into economies like we have now, there's more opportunity than there is in the best markets.
Well, the last thing I want to cover with you is this group that you founded that is an investors group. I actually don't know the name of it, but what I think is interesting about it is we've all heard you're an average of the 5 people you spend the most time with. We all know that the people you hang around are become your sphere of influence, become your ceiling. You're obviously in a different realm with this group that you've created, but I'm curious as to your thoughts. Like, one, how did you form it? And two, if I'm listening to this and I want to do something in my sphere, how would I accomplish that?
Yeah. So what you're referencing is the Lifestyle Investor Mastermind. And it's just a community of like-minded people that play the game of life and business at a really high level, but that they want to upgrade their the game that they're playing. They want to be around other people that are playing the game of life and business and wealth creation at an even higher level than they are. So, it's a community of, 135, 140 highly successful people from all different walks of life. And we have a very tall or large, high criteria for people that get in. And we've got a sub community for those that don't quite make it in. They have an opportunity to interview for a group called Tribe of Investors, which is kind of a lower ticket option of it. But those are the 2 masterminds that I run and I'm part of. And to me, the smartest thing you can ever do is get around people that think differently, that think bigger, that have the track record, that have the experience, and then learn with them, partner with them. Our big focus is tax strategy, it's connection, it's networking, it's, doing great deals. And many of which that cash flow to help people buy their time back, and then just the education piece. You learn something today that you can use for the rest of your life. It's pretty powerful, and it's just a fun group of people. We do all kinds of cool, life experiences together.
What you're describing is what I feel Real Producers is doing in these markets. I feel in the next couple of years, we're going to start doing regional and even national events. And I really hope that the top realtors in these markets start to embrace that line of thinking that you are talking about, where I can learn, I can take someone else. There's something that guy or girl is doing is different than what I'm doing, and I can learn and I can make my business thrive because of it. Justin, this has been phenomenal. Where can we find you? What's the best way to, obviously we find your book on Amazon, Lifestyle Investor, but where can we find everything else you've got your hands on?
Yeah, if you go to lifestyleinvestor.com, it's got everything. We've got free products from a blog and a podcast to, different price products from an online course to a masterclass on mobile home parks to a masterclass on passive income. And then the mastermind and everything in between. So it's kind of a one-stop shop for everything there. And I think there's a bunch of free downloadable products that people can get their hands on as well.
Thanks for your time, Justin. I know you spend most of it buying it back.
Yeah. And one thing I'd love to offer to your community, since, we've been friends for a while, is if anyone does want a free consultation to figure out what's next, you could go to lifestyleinvestor.com/consultation. And you can get time with someone on our team to help point you in the right direction.
I love it, man. Thank you so much. We'll see you next time.